Welcome back, everybody. So today we are going to be talking about markets, obviously, and the Treasury. Now, first of all, I just genuinely want to say I am very thankful for all the new subscribers, obviously liking, commenting, etc. Now, I do watch YouTube a hell of a lot, and everyone says it, but I genuinely mean it because the Instagram account, what I run, called DC Economics, is severely shadow banned. So obviously any engagement over here is very, very good. And obviously watching to the end of the video is great for YouTube retention, etc, etc, etc. So anyway, let's get into the rest of the video. So to give you some assessment in terms of how I am seeing the current markets, I try and put myself in the position of, in the shoes and the position of other people. So how would I be running things if I was Trump? How would I be influencing things, talking about things if I was in the administration, the Treasury? And also as well, how would I be running things if I was managing $20 billion under management? And how would I be allocating capital? And obviously, how would I be, let's say, protecting that portfolio? So now with all that said, over the past couple of weeks, what I've kind of been talking about and highlighting is I think a lot of this is very intentional and for very good reason. I think the cost of capital, obviously the cost of borrowing is very, very high. And I think they are trying to scare the market to what ultimately drives people into bonds. And ultimately, the bonds start to go up and the yields start to come down, and they can basically borrow cheaper money, what ultimately allows them to kind of grow and stimulate the economy, as well as roll over the government debt onto cheaper, desirable rates. Because at the current rates, the revenues, what they bring in, would not cover the expense on the actual debt. So it's a very, very big problem, obviously, going forward. Now, in a recent post, what I was posting on Instagram, I was kind of explaining how, to me anyway, it feels very much like kind of like going to the dentist. It's like you don't really want to do it. You don't really want to go to the dentist. You don't really want the filling, but you know getting the filling is going to stop larger problems in the future. And I kind of see it like that at the moment. Now, obviously, on Thursday and on Friday, we saw a lot of price action, a lot of volatility, obviously a lot of headlines, a lot of, let's say, influencers on YouTube, and a lot of people talking about tariffs. And again, there's a lot of discussion, a lot of debate to this entire topic. There's a lot of complexity to this entire topic. And like I was saying to you before, I am trying to look at things from a holistic point of view, and I'm trying to put myself in the position of the people in the administration, obviously Trump, and how I believe hedge funds and money managers are going to be allocating. Now, I just want to put on the screen now a recent interview what Scott Benson did, and I think it's very telling in terms of where his mind is at. So let's just play that now.
Look, I'm not happy with what's going on in the market today, but the distribution of equities across households, the top 10% of Americans own 88% of equities. 88% of the stock market. The next 40% owns 12% of the stock market. The bottom 50 has debt. They have credit card bills. They rent their homes. They have auto loans, and we've got to give them some relief. That I was struck by the statistic from last year.
That's the message right there. Just as a bystander, I'm like, wow, okay.
All right. Or that, I like the examples, and I was really struck by two different statistics last year. Summer of 2024, Americans took more European vacations than they had in history. Summer of 2024, more Americans were using food banks than they ever have in history. I went into two food banks near my hometown to ask, what's the story? And they said, it really takes, for a lot of people, it's a loss of dignity to walk in a food bank.
Of course.
But they were seeing a new phenomenon, that it wasn't their traditional clientele. It wasn't people who'd lost their homes. It wasn't people out on the street. These were working families who could no longer, $100 at the grocery store, that basket of groceries every week, they were missing 5, 6, 7 things, and they were coming to the food bank to top up. So that's not a great America. Record European vacation, record food banks. And no reason we can't keep the record European vacations going, but we got to take care of these other people. And you know what? That they don't want handouts. The Democrats had this strategy called compensate the loser. So first of all, the name of that strategy, I don't think the bottom 50% of Americans are losers. I think the system hasn't worked for them. I think that they are winners. It's just a bad system. So we are going to fix the system. And look, they want good jobs. They want their kids to do better than they do. They want to own a home. They want to pay down their debt. That, this isn't hard. And, I think that we can do this in the next 4 years.
Now, obviously, from this interview, you can kind of see where his mind is at, and he is focusing on the bottom 50% of households in terms of credit, in terms of lending. And I think he is very aware of, obviously, the cost of borrowing and what that means for the overall consumer. And this is why I think that they need to get the cost of borrowing down. And ultimately, like I was saying in a few posts where I was posting on DC Economics, I think that the Fed is in a very tricky position because inflation is relatively sticky and unemployment is not shooting up. So if they are seen to be cutting rates, it kind of looks like they are trying to prop up asset prices. So I feel that the administration is obviously trying to scare the markets by obviously implementing tariffs, what obviously drive people into, let's say, bonds. Now, just touching on some comments, what I've been receiving, who is going to be a buyer of US Treasury bills. Now, the thing is, what I'm about to say obviously might be a little bit contrarian, but I think that the administration is trying to push through stablecoin legislation and a framework what allows stablecoins to be one of the largest buyers of US Treasury bills. Now, I'll tell you a very interesting story. I won't get into the ins and outs of it, but I ended up meeting the CEO and founder of Tether probably a couple of years ago now. Now, obviously, when I was meeting him, I was probably about 8 or 9 gin and tonics in. I didn't really believe him at first, but anyway, what I'm pretty much getting at is when I was talking to him, he was telling me something what I found so incredibly interesting. He was saying that he feels that he has a moral obligation in terms of supporting a lot of these developing countries in terms of getting access to US dollars. Now, if you combine the traditional legacy financial system with the current, let's say, digital economy, and obviously how stablecoins can be the bridge between that, I think what the administration is trying to do is they are trying to set a framework what allows stablecoins to be one of the largest buyer of US treasuries, what ultimately allows them to distribute the US dollar frictionless across the world very, very quickly. And now I think this is how you can dominate and be the global reserve currency by bridging the gap between crypto and obviously the traditional system. Now when you start to look at other different types of continents like Europe, no one really wants euros, no one really wants pounds, nobody wants yen. Now I know that there is a lot of debate obviously around stablecoin companies in relation to are they really pegged one for one against the dollar, etc., etc., etc. And I think obviously with the administration kind of pushing more towards a, let's say, more of a transparent framework around that, I think that would kind of really help stablecoin companies to buy US treasuries significantly. Now, when you start to look at who were the buyers of US treasuries last year, you can kind of see these stablecoin companies were one of the largest net buyers of stablecoins in comparison to other countries. Now, I'll put the table on the screen. Now, what you can see, for example, is that Tether, for example, was buying more US treasuries than Ireland, than Taiwan, than the United Kingdom. And I think with obviously more clarity in terms of stablecoin framework, I think this could be a very good way on how you can distribute the US dollar digitally, frictionless across the world very, very quickly. And I don't really think a lot of people are really paying attention to it, how obviously stablecoins could play a major role in terms of support for the treasury markets. Now, obviously there's another debate. China has obviously been selling down their US Treasury reserves, and obviously as a result, they've been buying gold. Now, you don't need me to tell you that obviously the price of gold has been going up significantly. And obviously we are probably transitioning into a polarizing world. Now when we get to the debate around tariffs, I think it's all smoke and mirrors. I don't really think it ultimately matters. And the reason why I think that is, I think once we get the yields to come down, I think one tweet would instantly add $3 to $5 trillion in terms of market cap by basically saying that, yeah, we've done a deal with China and everything's going to be okay. And like I'm saying, one tweet like that or one news headline can massively, massively change overall sentiment, investor sentiment, obviously how people are viewing the economy. Now, obviously, I don't think they'll be doing that anytime soon until these yields start to come down. Now, do I think there is going to be volatility over the next couple of weeks and months? Absolutely. Do I think that Europe is probably going to be blaming Trump for all of their failing economies? Absolutely. I mean, it's either Trump or Putin or something else, right? I mean, so do I think retail is going to be buying the dip? Yes. Do I think that there's going to be a lot of traders obviously taking out leverage on the long and short side? Yes. Do I think there's going to be a lot of volatility? Yes. Do I think this is a short-term move? Possibly. Obviously, depending on where the yields are currently at. Do I think that there's a lot of other different types of dynamics? Yes. Do I think there's going to be a lot of financial commentary and a lot of financial debate around GDP, around tariffs, around blah, 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 blah? Yes. Do I think it's all nonsense? Yes. Do I think yields are important? Yes. Do I think yields are the main driver? Yes. So obviously we can debate tariffs, inflation, GDP, manufacturing jobs, the impact on AI. Now, I also think there's something else what a lot of people are not really paying attention to, and that is just the supply chain dynamics and just the talent pool in terms of manufacturing. Now, obviously, if you've offshored all of your manufacturing for, let's say, 30 years, you have towns and cities in China what are just specializing in specific components and specific types of manufacturing. Now, obviously, bringing all that back to the US, I think you'll have a skills gap. I think there'll be a lot of, obviously, other bottlenecks in terms of manufacturing, et cetera, et cetera. I don't think it's as simple as we'll just build stuff here, because the supply chain dynamics, obviously the tax incentives, obviously tariffs, et cetera, et cetera, et cetera. I think there's a lot of moving parts there. And obviously I think a lot of people are kind of getting lost in that debate. And like I was saying, one tweet can make all of this go away. And I think they are really looking at the yields before they start to do anything like that. So again, just now, I might obviously be completely wrong, but this is just how I am thinking and assessing where we currently are from a market perspective, from a fiscal perspective, and from a monetary perspective. And I think Trump is going to be doing a lot of reputational damage short term, but I think longer term, it is great for the US in terms of obviously dealing with all the pain now. And then they typically have, let's say, 3 years to kind of fix everything and build everything back better. And again, I'm just trying to put myself in Trump's position that this is his last time as president. So he has a legacy to obviously leave, and obviously with his motto, make America great again, I think he really wants to go out and die on that hill, where when people look back at Trump and think, did he make America great again? I think he really wants to be remembered as that he really did do that. When you start to look at people in the administration, like Howard Lutnick, I think that is also a very telling sign in terms of how his mind is thinking. Now, I'll put a interview on the screen now.
I don't have a big enough percentage. I probably have, No, I can't say, because then people can figure out the money and how much I have. I would say I have hundreds of millions of dollars.
Okay.
Hundreds and hundreds of millions of dollars exposure to Bitcoin. And it will be billions.
I was going to say, so next year when you come back and we'll do this again and you'll be a Bitcoin billionaire and
yeah, but you remember that model I told you? So if every time Bitcoin dips, I'm going to be the buyer. Right?
Trust me, I know why you're doing the lending.
It's all coming. You're figuring it out.
Listen, you don't have to explain that one around here.
So I got the 50% Bitcoin, I got the Bitcoin lending, but basically what you're going to see is Cantor Fitzgerald is going to be the sponsor of Bitcoin into traditional finance.
Mm-hmm.
And so we will be the leader of it. And I'll pull out this podcast in years to come and say, see, I told you, because no one's going to remember.
Of course.
Right. But all the banks, after we do it and show people how to do it right, they'll all copy.
Mm-hmm.
And so the asset of Bitcoin will just, as it becomes more accepted, it will become more valuable. And the whole Bitcoin nation should just call it a commodity, never a currency.
Mm-hmm.
Just call it a commodity. Because if it's a currency, you're attacking the politicians of the country,
mm-hmm.
right? You're trying to replace my currency with yours.
Mm-hmm.
But if you say, hey, I'm just oil, I'm just gold,
mm-hmm.
I'm just a commodity, leave me be, right? Then they'll leave you be. And that is true. And it will be why Bitcoin, which is rare and is special, will become ever more rare, as we both know,
mm-hmm.
ever more valuable over time. It'll be financed just like gold is, right? Gold is, it's not like super financeable, but it's financeable. Oil,
mm-hmm.
it's not super financeable, but it's financeable, right? Bitcoin will be financeable. Bitcoin will be way, way, way higher, sometimes lower. You just have to have faith.
Now, obviously, as you can see, he is very pro crypto, very pro Bitcoin, very pro the space in general. Now, when you take into consideration everybody else who's in the administration and how, let's say, technology and business focused they actually are, I think you could obviously make the argument for stablecoins about the reasons why they are, let's say, pushing for legislation in relation to stablecoins. And also as well, especially when it comes to Howard Lutnick, when you start to look at his previous firm, what was called Counter Fitzgerald, I was looking at their recent purchases, and they have massively increased their overall position in MicroStrategy in February. Now, their portfolio is sitting at roughly 20% of their entire fund is in MSTR. Now, obviously, when you start to think about all the other different types of, let's say, private investments, what they probably have in terms of crypto assets and different types of stable coins and everything else, I think you can kind of piece everything together and you can kind of see why this administration is probably pushing heavily for tariffs. And obviously that's creating all of this debate, all of this headline. Everyone's talking about it on CNBC, Bloomberg, Financial Times, YouTube, etc., etc., etc. And I think a lot of people are kind of missing the real big picture. What is yields? They need to get the yields down. And ultimately, they can kind of use stable coins as a way to be a net buyer of US Treasury bills. And then obviously that opens up a larger debate in relation to Bitcoin and obviously the national reserve of Bitcoin, as well as all these other different types of crypto assets. And obviously what you've got to remember is that the news is obviously showing you news, what obviously wants you to be emotionally charged and obviously take action. Now, this is just my assumption, but I believe if these rates do not start to come down sooner rather than later, I think that they will really start to ramp up more and more news in relation to tariffs, in relation to, well, we are going to tariff China even more, because that will make investors very, very worried about the future. And obviously, as a result, they will start to allocate capital very, very differently. And ultimately, again, that will start to bring down the rates. And this is something what I think a lot of people should be paying very, very close attention to. Now, obviously, that opens up another debate, what obviously is, where do you think the rate is going to be? What rate do you think they are trying to aim for? Now, I personally don't know. And obviously, it's all up for speculation and debates, but that is just kind of how I am assessing markets. Now, ultimately, I am trying to hedge out my risk. So I'm trying to obviously be long and short at the same time. Now, over the past couple of weeks, I have been short. And obviously, as you can probably imagine, that has worked relatively well. And now also what I want to talk about is technical analysis, just from a perspective of breaking down or breaking out. Now, when you typically see, let's say, breakdowns or breakouts, what you typically find is that the price needs to go back and retest the areas of resistance and support. So it wouldn't surprise me that we start to see, let's say, a short-term rally, what would obviously retest previous levels of resistance. Now, that would be a very good indication. Are we going to get a rejection or are we going to follow through? Obviously, if we get a rejection, I think the trend has changed and ultimately prices will be going lower. Now, what I'll be looking for is what is the 10-year yield doing? Obviously, what is the cost of borrowing actually doing? And I think that will drive the market down. Now, also as well, what I've been thinking a hell of a lot about is just in relation to retail, because retail over the past couple of weeks and months, and even years, to be honest, they have all been told to buy the dip. Now, when I look at comments on my own Instagram page, when I look at other YouTubers and everybody else, everybody builds a channel around buying the dip or around a specific type of stock, Tesla or Nvidia or whatever, or I'm buying the dip, Nvidia seems cheap, or Tesla seems cheap, etc., etc., etc. Now, granted, I might be completely wrong, right? I am fully aware that what I'm talking about, I might be completely wrong. I still think from a historical average perspective, the market is still significantly overvalued relatively compared to historic averages. Now, I don't think, obviously, retail investors are really paying too close attention. They just see, oh, it's gone from this price and now it's at this price. Oh, it must be cheap. When they're not really looking at valuation metrics. And obviously, when you start to look at recent sales from Nvidia CEO, from JP Morgan, from Warren Buffett, and all the, let's say, very large institutions, it makes me very, very nervous when we don't really have much buy-in from large institutions, family offices, large pension funds, etc., and we really start to see a lot of retail emotional driven buying. I just find that very nerve-wracking. And as well, I've seen a lot of obviously recent news around Trump and Elon in regards to protesting against Trump and Elon and all the rest of it. And obviously there's a lot of there's a very large movement in relation to obviously selling Tesla out of pension funds. And I've been kind of reading a hell of a lot about that. And again, I'm just thinking about, if I was Elon Musk, what would I be doing? And for me to take downside protection and insurance, I would be shorting my own stock, because that would allow me to get the insurance and hedging out my risk in terms of what I'm obviously doing in the administration. Now, what you've got to take into consideration as well is that, let's say these pension funds, let's say they do start to sell Tesla. Now, obviously that has a cascading effect on other different types of pension funds. Obviously, a lot of other different implications as well. Obviously, the overall stock market in terms of Tesla's weight in the S&P 500, etc., etc., etc. So there's a lot of moving parts here, but ultimately, I really do think that the yields need to come down, and the administration is going to use all the avenues that it can possibly get its hands on in terms of news, outlets, etc., to really drive home tariffs about how scary they are, what ultimately makes investors very emotional, what ultimately drives them into bonds or drives them into scarce desirable assets like Bitcoin, like whatever. And I think the administration is probably going to be using stablecoins in relation to propping up or being one of the largest buyers of US Treasuries, what ultimately transitions the current financial system into the new digital economy. Now, I think in a few years, I'll probably look back at this video and be like, wow, I was so right, or wow, I was so incredibly wrong. But yeah, I just think the amount of people who are around Trump, who have a good understanding of business, a good understanding of markets. Now, I know, even me saying that, I know it can be very emotional, obviously. Wow, you put too much trust in this administration. Wow, you put too much trust in these people. But when you start to look at their backgrounds, they are managing a significant amount of money. They all come from New York. They'll all have friends who are investors, banks, etc., etc., etc. There'll be a lot of discussions, a lot of talk about all of this, and obviously I believe that they will coordinate news outlets, etc., etc., to drive up this frenzy in terms of negative sentiments, what ultimately drives down the cost of borrowing. Now, that is where my current mind is. Obviously, if you think very differently, if you think that I've missed anything, please let me know in the comments. I do read every single comment. I will engage with every single comment. Now, like what I was saying before, thank you very much for the engagement, commenting, liking, subscribing, and all that good stuff. And to the 4 people who keep on supporting me, I hope you're having a lovely day, and I'll see you in the next video. Take care. Bye-bye.